Gurmeet Chadha joins us now. Let's connect with him to understand what he's making of the current market setup. Gurmeet, good to have you back on ET Now. Thank you for joining us. What do you make of the market setup? Do you think this market will continue to climb the wall of worry?
So Nikunj, I think some consolidation is due and probably should happen. There are few pockets of worry across market caps, probably more in small and micro. And if you see valuation wise, I think broadly Nifty, you still at 19 times forward and about 22 times if you take 865 as the exit EPS. But mid and small cap, even the indices are now almost 23, 24 times. So I think some caution is probably needed in stock picking, and it happens in any bullish phase. There is some excesses which get built in, but broad market is not that expensive. I think market would probably want to wait for a formal pause by Fed as the FOMC meet goes out, and some maybe direction on inflation. I think that's been one worry with crude also climbing up, inflation being very sticky. So that's something market would want to wait. And one thing we have to remember that this pause could be for longer, which means while there could be a pause, higher rates might remain for some time, which means the valuation multiple for equity will always be questioned once market move up. So pay a reasonable price. I think there are opportunities in the market. You did mention of the bounce in the power stocks, etc. There are a lot of pockets in the market where markets are, valuations are say reasonable. So have a more balanced asset allocation.
Per se, in the funds which you manage and advise, what have been your top 3 additions and subtractions?
So Nikunj, we added, as I said, some power and energy related and utility related stuff. So we've added to our position in Tata Power. I think it's one of the most integrated plays, starting from generation, transmission, and the renewable energy portfolio. They got a refinancing done recently. At some point of time, probably they will hive off the renewable portfolio, and they have a clear goal of 25 gigawatts there, doing very good stuff even on EV charging space with some very specialized tie-ups, and they are in some bit of smart meters as well. So it gives you a complete play. We also like some of the transmission names, where there is valuation comfort, like Power Grid, etc. And tactically maybe some of the thermal sources of power, including Coal India. We continue to add, in the overall home improvement theme. I think this theme looks more structural to us. So we've added some names in tiles, in sanitary ware, as well as selectively in cement, where a lot of companies, especially in the mid and small cap space, are trading below replacement cost. In some cases, it's $50-$60 a ton. So we just saw Ambuja buying Sanghi at almost $100 a ton. So I think cement probably could be good surprise on the Q1 earnings. And building on some large banks, I think there's been some relative subdued performance the way market has gone up. I don't think that the top private banks have done well. So we're going for the safer names there as well.
But in the last 2 minutes, there has been a bit of a sharp correction when it comes to the banking names, especially the private banking names at that. So HDFC Bank is down a good 2%, IDFC First Bank, Federal Bank. Let's pull up the intraday chart if we can of the banking index as such, of the Nifty Bank, because that's seen a bit of a correction. At least that's what is popping up in my screen. So yes, there has been a sharp fall. Even other names like Kotak, etc. are slipping a bit. But the other space which is actually seeing a bit of a correction are these textile plus real estate plays. Pull up a Raymond, that's down 5%. Century Textiles, that's seen a cut of around 4%. Bombay Dyeing, which is sort of a special situation stock right now. Gurmeet, do you have a view on any of these names?
As you rightly said, a special situation with Bombay Dyeing because of the land deal in Worli. Also, Century also has a real estate element in it. So I think you see these things popping up. But more structurally, we've been lucky in terms of being early in some of the other names there. But we are not really looking at any special situation as such. For us, special situation which we did last was Sundaram Clayton, where there was a 3-way split between the holding company getting preference share as well as the auto component company. I think this is the last special situation we did. And if you can call Jio Financial as a special situation by adding more to Reliance. So, but other than that, we don't have any sizable exposure in Shahar, particularly in this pocket.
Buy Jio after listing? I mean, did you buy Jio independently?
We continue to add Continue to add because we believe this could be something which could be similar to Bajaj Finserv kind of if you believe in that, right? I think you have to be a believer. Right now, there's not much to talk about. Even the lending book is hardly in few thousand crores. The collection infra, there's hardly people. So it will grow over a period of time, both the credit and the collection infra. But eventually, they will incubate businesses in insurance, in broking, in asset management. Asset management, especially, they have big plans. Just look at the capital infusion they have done with BlackRock, and they're stitching together a nice team. So we are trying to have a more 4 or 5 year view here. And we do understand that just because you are a disruptor doesn't mean you'll disrupt financial services as well. This is a very different space. So, for example, the largest seller of commercial vehicles is not the largest financier of commercial vehicles. It's Sri is not Ashok, Hinduja Finance or Tata Motors Finance, right? So this is a very different game, but we believe they are stitching a good team, and think they have the resources, the capital, and the team to do it. So we are taking a more 4 or 5 year call and trying to add more NGO financials as and when we get good price entry points.
A bit of a faith right now when it is about geofinancials, and on that basis Gurmeet has been adding positions. But Gurmeet, it's also been a week and a month of quite a bit of action in the primary market. Anything that caught your attention? Because a lot of these urban discretionary consumption names, hotel industry as well as yatra etc are coming to the markets. Anything that you are tracking?
The last we did was one of the pharma names, which we did. Other than that, we haven't done much. We are looking at Tata Technology. That's one name which really excites us. Again, from a very long-term perspective. Again, we need to see at what valuation it comes in. Travel we continue to like, so we continue to own Indian Hotels and Lemon Tree in that space. Lemon Tree has commercialized another asset in Mumbai, one of the large ones this quarter. And you have a World Cup. There is Miss World pageant. G20 just got concluded. So in general, as well as the propensity to travel and spend on leisure has gone up. And also, I think one structural change which has happened in hotel is the model. I think they've worked out the capital allocation model well. It's a nice mix of management contracts versus owned hotels. If you see incrementally, they're adding more keys in terms of management contracts, which makes it more asset light. And I think that's one learning which I think in future the multiple could justify what they are right now trading at. It's just because if you consider what the new model is right now, some of this valuation may sustain. So I think there's need of momentum here in terms of earnings. And as I said, the business model also has changed.
Okay, point taken. So that's a view coming in on some of the hospitality names. In fact, the other big trigger, apart from, of course, the Fed meeting, where the outcome we'll get on Wednesday night, the other one is, of course, the Parliament session, which started today. It's albeit a small session, just 5 days, but in the words of the Prime Minister, several historic decisions are likely to be taken. What is on the agenda and what could be those decisions? Let's go across to my colleague Prakash.
The special session of Parliament has begun today, which is a 5-day session. It started with an inaugural speech by the Prime Minister in the Lok Sabha. However, just ahead of the formal functioning of the Lok Sabha Speaker has congratulated Prime Minister and the nation on grand success of G20 summit. While initiating the discussion on Parliament's journey of 75 years, Prime Minister has mentioned the all big successes India has achieved in the last few months, right from Chandrayaan-3 to G20 summit. Since it's the last day of functioning in old Parliament building and the functioning will resume in new Parliament building from tomorrow, Prime Minister has remembered the all historic moment that the old Parliament building has witnessed in last 75 years. Prime Minister has mentioned the all important political legislation and economic development that the old Parliament building has witnessed. He has specifically mentioned the development that is with regard to implementation of GST, OROP and 10% reservation for economically weaker section and so on. So these are the important milestones that the Prime Minister has mentioned in his speech. When it comes to important bills that are listed in the business list for the special session of Parliament, that include important 4 bills. To begin with, the CEC and EC appointment condition of service term of office bill 2023, which is most controversial, and opposition parties have shown their apprehension. Ahead when it comes to some another important bills, that is with regard to the Advocates Amendment Bill 2023, the Press and Registration of Periodicals Bill 2023, and the Post Office Bill 2023. These bills are there in the list of business for the special session of Parliament. But the opposition parties are very much skeptical. They find no warrant to call a special session of Parliament to get this bill passed. So they are expecting some big decision that is going to be taken by the government during a special session of Parliament. However, they have already demanded government to introduce women reservation bill during current session in order to take political mileage.
Left tomorrow's a holiday. Let's just start getting some trading ideas. Nuresh, it's a holiday tomorrow. You may come back and then you will have the Fed decision. What should a positional trader do, especially in sectors like banks, railways, and defense? Purely a trader for next 2-3 days.
Time to get out of at least the PSU banks, which have rallied a lot. The larger banks, nothing much has happened, so that's a hold. Defense and railways, if you've bought at much lower levels, it's a hold, not a buy at current levels, not a trade at this prices.
Kunal?
So in terms of, in terms of BTST trades, I'll recommend two stocks. The first one is actually buy on Coal India. Now that's a stock which I think is looking attractive at current levels. So would suggest a target of 300 for Coal India, stop loss at 270. And NTPC is also another stock which has made a decent comeback after a minor correction, 7-8 points, I think last week. So that's also a buy. 255 is where I would aim the targets for NTPC, stop loss 235.
Okay, so those are the trades and the BTST ideas coming in from our charters. But what's happening in the dealing rooms and why are the dealers talking about Metropolis Healthcare? Let's go across to Sharath to find out just that.
Focus, we are having Metropolis Healthcare, and what we are gathering from the dealers is that buying is being seen in both the accounts of the HNIs as well as some proprietary accounts. Now importantly, if you look at the volumes also, that has also risen, and the dealers are stating that there would be at least a 20% upside potential going ahead as well. Now we did check the delivery volumes also, and on a 7-day average basis, it is still above the 35% levels up. Now fundamentally also the diagnostic stocks have been buzzing, and the important thing is that the price discrepancy which was there between the online players and the offline players, that is expected to come down. So of course the online players did take price hikes ranging between 10 to 30% as per reports, but the overall diagnostic players, they have also started taking price hikes in their non-COVID products as well. Now because of this, the price differential that is coming down, and that is why market is sensing that there could be buying coming in for the diagnostic stocks.
Thanks so much for putting that into perspectives. Of course, the entire diagnostic space is in focus, but within pharma and healthcare, Gurmeet, which are your top recommendations?
So, we again are tracking diagnostics. Initially, we had a bearish view when the disruption happened by the new age companies. I think its consolidation is coming back to stronger names. So we tracked Dr. Lal while Q1 was a little soft because of a bit of seasonality, but they continue to improve on the test mix, right, as well as the new distribution they're setting up, both in terms of collection centers as well as the super specialty test. I think the patient realization has also gone up. It's nearing to almost per patient to about $800 or something. And I think there's a lot of inorganized market here. So we probably see some movement also, which we called from probably informal to formal over a period of time. So that's something we are tracking now. Hospital space we like, but it's just that the stocks have just run up too quickly. And as I said, in hotels, I think even in hospitals, I think again the capital allocation has improved significantly. So for example, Max is only focused on Delhi, Mumbai, largely metros, and Narayana Hrudayalaya again is more on tier 2 towns. And then we like one name which is into child pediatric care, which is Rainbow. So we are tracking them, but valuation wise again not much comfort in these markets.
Rupees for State Bank of India, there's a bit of a mid-year turbulence which has happened in some of the banks. And Kunal, it's like saying that first large cap stocks they move, then mid cap they move, then small caps have to catch up. The two sumos, if I may use the word, is HDFC Bank and SBI. And both of them are behaving like sumos right now. They're not going anywhere, right?
Yeah, I think they're stuck.
Yeah, and Bank Nifty is going higher.
Yes.
So if sumos are not going higher, where will the leadership come from?
Yeah, that's a problem with many of the sectors. Like what we saw, for example, mid-cap IT names, the IT sector, where mid-caps moved up higher, large caps, they were underperforming for quite a bit of time. But then large caps, IT stocks, they made a comeback. I am not sure whether the likes of SBI and HDFC Bank, whether these stocks can make a comeback or not, because the volumes are so the volume patterns and price patterns are a bit all over the place for these stocks. So there is no sign of a confirmation of a breakout. On the other hand, you tend to see a breakout. The stocks come very close to a breakout, and then all of a sudden you see the stocks reversing, like what we saw for HDFC Bank today. So that's the problem with these names, that they are not showing signs of confirmation or follow through up move. That caps the move for the indices, because with the lack of participation of large cap stocks, the move cannot be sustainable. Yes, you may have odd stocks flying up 10, 15, 20% higher on a couple of days, but then what we are looking out for is a sector trend and a pattern in the making. That becomes a lot more difficult with the lack of large cap stocks participating.
And the Bank Nifty is gone. It is gone. Nuresh, the sumos are not going anywhere. And if the sumo stocks are not going anywhere, it's a difficulty, isn't it? Gurmeet,
So
I like the
it's
smile on
overall-
your face. Every time I say Suno, Gurmeet, you're smiling. Something you want to share about sumo wrestling here? Tomorrow is Ganpati, by the way. Nothing to do with sumo.
I just love the analogy there.
It's so true. I mean, just think about it. I mean, they are the two heavyweights. Between them, I guess the Bank Nifty, Nuresh, would be what? SBI and HDFC Bank put together would be 25-30% or maybe more?
So HDFC Bank itself is 25%, and then maybe another 10% is SBI. So
There you go. 35%
And you have
of the
another-
Nifty is not going anywhere.
and you have another ICICI which is not going anywhere.
Yeah.
Kotak as well.
25%.
So then why should one buy Bank Nifty, Nuresh? You guys are prompting
So-
me to ask this question.
So one by one, we are seeing the smaller names break out. We are very close to the breakout point. So we've not gone anywhere for HDFC Bank. But if you look at SBI at 605, the previous all-time highs is around 620, 630 band. Then you have ICICI Bank at 990, 95. The previous all-time highs are at 1010. Then you have Axis Bank, which has made a new all-time high. You have IndusInd Bank, which has tried to get closer to a 52-week high. So they're not going anywhere, some of them, but very close to it. So HDFC and Kotak, which are 10% or more from the all-time highs. At least SBI and ICICI are closer.
Somebody's loss is somebody's gain, because it seems like select NBFCs are actually perking up when rest of the banking names are tumbling. So pull up a Sundaram Finance, that one is doing all right. REC has been doing very well for itself this year, and that continues the up move as well. And Cholamandalam, etc., from the lowest point of the trading session, have seen a bit of a perk up. Gurmeet, I know Bajaj Finance continues to be a favorite there. You talked about Jio Financial as well, but let's say from the microfinance, from the other select NBFCs, any other name that you would want to recommend?
So actually, we like the affordable housing space. The Sarfareshi Act is at 15 lakh, which means the asset recovery is pretty good. Plus, it's a secured lending, and banks do not get much into affordable housing. They actually buy the portfolios to meet the PSL requirements. So we like Home First, very good team, good pedigree. They've been tested in various cycles, very focused as well, and they've guided for a 30% growth. Which makes the case stronger. We like some of the names which are, adding more new to credit customers to the system, including 5-star, including Credit Access. So these are some of the names we like. Poonawalla, we were lucky in terms of getting very early when they acquired Magma FinCorp. So we like some of this space. It's just, but you have to be right on the credit cycle. At some point of time, this will turn. And at that point of time, you have to be quick enough and nimble-footed enough to reduce some exposure, because it will not give you much time. For now, I think we are good for probably a few quarters.
I just missed the last part. Just broke into conversation with Anisha in the studio. But did you say 5-star you like?
Yes, 5-star and Credit Access.
But why do you like 5-star, or for that matter, in the small space? I'll tell you why. My logic is that, and I've been asking this question to everybody, and no pun intended, I also like 5-star, but I like the chocolate more. But the challenge, Gurmeet, with economy is that we've seen a K-shaped recovery, which means the rural India is not doing well. Two-wheeler sales are not coming up. SME and the rural-facing businesses are under pressure. If that is the underlying bent of the economy, then why should one buy microfinance or banks or NBFCs which have a large exposure to that category or that cohort?
So, Nikunj, I'll tell you why we like. So, lending is not just ability to pay. It's also, more importantly, in microfinance is willingness to pay. And how it's also art as much as a science. So if you see the way they do credit underwriting, so there's bias towards the women owners, right? They also take different forms of collateral, which are both soft and hard, and they've been tested in a lot of cycles. Because in India you have state elections. And there are a lot of freebies and exemptions given more often than not. So the business gets evolved over a period of time, and credit is not something which everybody understands. So we are actually wary of people who actually grow too fast, especially in bank. But in these both cases, we've seen how they have done over a period of time. We track the stress pool, how the recovery, etc. happens. The local guys actually know everyone in the area where they lend. In fact, for both five-star, even UP has done very well for them. UP was considered a no-go area, for microfinance for some point of time. But that's again has done well. So I think we are, as I said, but you have to play the cycle well. You can't take let's say a 7-8 year view on it. If you play the cycle well, and when things turn, you should be nimble-footed enough to get out of it.
697 rupees, but Gurmeet, I still like 5-star the chocolate more.
Me too.
Okay. 6 minutes to go, and looks like we are in for a flat day of trade. Kunal, just when it appeared that 20,000, okay, the Nifty was comfortably cruising along, you got the bank Nifty, which now is more like a chink in the armor, so to speak. Not even chink in the armor, more like a fly in the ointment. So you're not going home with a one-day break with any great handover from the bank Nifty.
Yeah, so I think today's handover is not good for Bank Nifty, because even after such a kind of a solid performance from the PSU banking index, I was actually expecting that we may at least have a slight flattish to positive close for the Bank Nifty. We did that, I think, intraday, but that was very short-lived. You have selling back again into the private sector names. I think HDFC Bank is also trading closer to the low point of the day. So, we can probably expect that maybe if this is just a couple of days of selling and the index doesn't break below a major support, we can expect that the index would bounce back. But then the support which I would be watching out for the banking index is 45,500 levels. This was exactly the breakout point in the previous attempt for the Bank Nifty when it managed to break out and then rise to 46,200, 300 levels. So, on the way down, I think 45,500 is an important support to watch out for.
Okay, point taken. That's the take on Nifty Bank. It's of course broken below 46,000, which is an important psychological mark for Bank Nifty. But Gurmeet, before I thank you, your top 3 bets from auto and auto ancillaries?
So we still overweight of passenger vehicles versus others. So Tata Motors, M&M being our top holdings in the portfolio, and we are playing the value chain completely, Anisha. So we're playing Uno Minda, Sona, BLW, Sandhar. Sandhar is more two-wheeler. Even Uno Minda has 40% mixed towards two-wheelers. But all 3 cases, we believe the content value, the kit value per vehicle will keep going up. There's a lot of innovation, a lot of JVs they have done, and a lot of new labels added as well. So we want to play the complete value chain, and auto ancillaries give you a wider play because some of the names in PV and two-wheelers may not be listed, like Hyundai, Toyota, or Kia, etc.
Okay, point taken. The BTSC trade, Naresh, I think we missed yours. Tell us what's the stock that you would recommend as a BTST or STBT?
So first would be a buy in Hero MotoCorp, momentum for the last 2 sessions, stop loss at 3,090, target price of 3,200. Second is a buy in LIC Housing, a relative outperformer in the pack, stop loss at 453, target price of 465.
LIC Housing Finance, 4 minutes to go, and again, this entire HFC space, my reservation is that this space is getting very, very, very competitive. You look at any of the HFC stocks or any of the companies which are in the HFC space, unlike what appeared 5-6 years ago, that one mega trend in India is that India needs more houses, which they still do. Housing finance companies will only grow and grow and grow. But then came the competition, fintech, big giants like SBI, even HDFC Bank now is thrown their hat in the ring because post-merger, if they are going to grow, they are going to be growing the retail, their HFC portfolio in a very swift manner. Earlier, they were a distributor for HDFC Limited. Now they will be able to, now they can, in a sense, go out with commanding products because of the reach and because of the distribution. So, Gurmeet, closing comments. HFC, on paper, great, fantastic, powerful, but companies have struggled here.
No, they have, Nikunjan, and I agree with you. That's why I said we were to affordable housing with Home First, and we don't hardly have any exposure to HFC. And then we said, the banks actually collaborate, they don't compete. And I think also in HFC, you have to get the model right. So mortgage is about focusing on what geographies and segments you want to do. If you want to do Delhi, Mumbai, urban, you can't compete with banks, because the cost of funds are lower, the rate is lower. So, and NBFC, the cost of funds would always be higher. Plus, some regulatory arbitrage has also disappeared over the period of time. A lot of regulations by RBI. So play the affordable housing more, in my view, and get into more digital lenders which are expanding the net base rather than competing with banks.
Okay, so that's the take coming in. That's the word as far as some of these housing finance companies are concerned. But on that note, Gurmeet, we'll let you go. Appreciate you making time. In fact, Kunal as well as Naresh, appreciate you as well joining us on the show today and talking to us about the technicals of the market.